What's going on, guys? I hope you are doing well this morning. It is 10:08 where I am at Central Standard Time. Man, I woke up kind of late today. I had a pretty nice evening, but overall, yeah, just felt the need to get onto the charts because so I'm seeing, pretty much things that are validating the bearish case that I spoke about the other day, but I want to get more in depth to it, and I want to start with the S&P 500. All right, so where we left off was this mini, and they're indicated by the yellow lines right here. I'm gonna have a sip of my coffee real quick. Sorry. Alrighty, that was good. That was good. All right, in the yellow dotted lines here, we had indicated a descending broadening wedge. And yeah, I was expecting price to go sideways and down until it ultimately got a candle close breakout, which it did right here, and then it ripped to the upside and actually exceeded expectations by a couple percentage points, which would be boop right here. Candle close 1% to the wick high 1.5 almost, which is pretty good. Now, we did lose this key area, this upward sloping yellow line. I'm just going to change the color of it so you can see what I'm talking about. All right, boop. All right, turn it back yellow. All right, so we did lose that level as a support, but caveats are upon us here. If you go to the daily time frame, all right, we had daily candle closes hold support at this key downward sloping thick blue line right here. Okay, so if I were to zoom out, all right, coming back all the way from the bear market beginning. Okay, yeah, it's being held as support, so you can't necessarily say that we are going back into a bear market. To me, I mean, if I were to see this, I mean, we had a dead cat bounce right here, then we had a bullish engulfing candle, took 6 days. So theoretically speaking, all right, we're almost 2 weeks away from actually bouncing off of this key level of support. So I have to maintain bullishness. Now, I do have to emphasize this is a new pattern that's showing right here, and this is the main pattern that I'm keeping my eye on, in conjunction with this downward sloping blue line, obviously, because it has daily time frame significance. But this is a larger descending broadening wedge pattern. All right, I'm hopeful that the bulls are able to maintain this level, basically at 3932.79 right here. If price can stay just above here and give this area a shot, I think the bulls still have a shot to keep and maintain this level and to then continue upward and all that kind of stuff. But that's kind of like where my mind is at in regards to the S&P 500. It's going to be rocky, it's going to be shocky, but I do feel that the bulls have done their job in regarding to maintaining that bounce for a continuation upward. Now, there would be something that would freak me out, which is we get rejected off this yellow line, we get rejected off this red line here, and we break below 39.32, and then we break below essentially all support levels. That's still a possibility. Unfortunately, that's just the reality of the situation, given our macro environment. But we do have excessive inflation still rampant. I've heard multiple economists and theorists, and I don't want to venture too far off into this away from the charts, but there's this very prominent economist stating that we're going to have sticky inflation for the next 5 years minimum, due to the United States moving their manufacturing back into the United States and into like Mexico, maybe even to India. So there has to be a restructuring of the manufacturing market due to what's happening in China and all that kind of stuff. Historically speaking, that's an inflationary event. It takes a while for that to really play out, but yeah, so frankly, that's good for stocks, it's good for bonds, it's good for crypto. So I mean, it's not necessarily a bad thing to see temporary pullbacks here and there, but ultimately, yeah, my thesis is going to hold until I see otherwise. If we're able to break above this red line, hold it as support, we're most definitely going to be continuing this upward trajectory, given that the descending broadening wedges break roughly 80% of the time to the upside. I believe it's 83 to 83% roughly. So high likelihood that yes, we could potentially see more downside. We could break, into new lows locally, right? But if we're able to break out of that, it's back on. We're most likely going to retest 4179.75 once that occurs. So it's more likely for the bulls to prevail in this scenario than it is for the bears at this time. All right, but the bears still have a 20% shot roughly. Okay, so it's not like it's zero. But you must be prepared for the bullish case and the bearish case because there's always that in considerations. But yeah, as far as the 4 hour, I'm going to go a little bit more in depth into the 4 hour here. We did get a cross above the zero line right here, and the money flow is looking rather weak for the bears. All right. As you can see, if I zoom in even closer, it looks like the bulls are trying to do, a quick cross to the upside. Now, I don't like to get too caught up in the weeds with this, but I would consider this kind of like a little mini trigger wave that could actually ignite us to go back above that upward sloping yellow line. But I'm going to zoom in into the 2 hour and you'll see what I'm talking about. We do have a buy signal, and we have not one, but two, we have three trigger waves right here. All right, so that's powerful. The more trigger waves you got, the better. that indicates trend reversal at this time. So if I zoom in on the candles, it looks like we got an attempt of the bulls trying to cross above the exponential moving averages, basically break them as resistance. All right, and we do have 14 minutes left until candle close. So as long as this candle closes above the 9 exponential moving average, it's game on. Obviously, on the 2 hour perspective, we do have a bullish engulfing candle right here that nullified this bearish engulfing candle, and then we are seeing the bulls actually follow through on that. So that's nice from a short-term perspective. But heed with caution, the money flow is still in the red. So I like to go on the 4 hour myself. The daily for the S&P 500, I'm pretty boring. But this actually is a nice little development right here, because it looks like even though that we're getting a sell signal right here, the momentum waves are getting closer to crossing the zero line, and when that happens, it's just easier for the bulls to push price action to the upside as opposed to the bears pushing the price down. So that's where my mind is at this point. All right, so I'm gonna go to Bitcoin, and I'm just gonna keep it at Bitcoin. I usually do all like sorts of charts, but I want to keep it, true to Bitcoin's sake. All right, so I'm gonna turn off Market Liberator. It doesn't show up on the S&P 500. Whoops, wrong one. Boom, right here. Alrighty, so this is a break to the downside. All right, so I had stated that yes. We, on the daily perspective, from the momentum wave point of view, we're seeing money flow actually starting to curl to the downside, and we're actually showing it. Now, we did kind of have like I wouldn't say a fake out. I would say like the bears kind of got their whale crew, and they've been shorting the market. And I can zoom in on the 4 hours so you can actually see what I'm talking about. Yeah, we did get another yellow X right here, and usually you don't see yellow X's on higher time frames. You actually see them on like the 1 minute, 3 minute, 5 minute, 7 minute, 15 minute, 1 hour. But when you see a yellow X in the 4 hour, we're talking like a big whale, like someone who actually has like a crap ton of money, a crap ton of crypto in the market, and they're dumping it right now. So this is not a good sign here. It looks like the Bollinger Bands got tight for just a little while, and yeah, but now this break to the downside has been confirmed. It broke below the previous basically support, and yeah, we're kind of testing these lower low areas, so that's not good. We're at the 618 level, so I would maybe expect like a lower high attempt where, yeah, we could rally back up, retest basically 21.98 as resistance, and then kind of continue lower. That's kind of like where my perspective is, but given that this did break down, this pattern breakout, the projected target is all the way down here at 18.5 to 18,000. All right, but I will say this. I'm going to thin out these lines right here, okay? Then I'm going to thin out these lines right here. All right, so essentially these downward sloping lines, these have more precedence than the previous pattern. So I'm seeing this as true support and true resistance right now. We do have horizontals here at the Fibonacci levels, which is the 618, the 5, the 3, 2. So I could expect bounces right here eventually. But yeah, up until this point, it's unfortunate we are continuing this downward trend, and yeah, the bear whales, if you will, are really participating, and they're dumping their assets to push prices even lower. Until I see a break above this red line, I cannot be bullish, frankly. Until I see a bounce essentially off of this line, I can't really expect a true significant, 3 to 5% bounce. I just can't see that. So yeah, I just wanted to update you on this. I know it's kind of bad news, but ultimately, I do feel that if we do come back here to the 18K, I think that's just a great opportunity to dollar cost average into this asset. You're going to be getting it 20% cheaper essentially from last time where I left off. So I mean that's not a bad thing. So we'll see how it goes, but for the meantime, we did lose basically 22K as support. We lost 22.3K, we lost 22.2K as support. So those areas I do see them as resistance now, indicated by this red line. So yeah, I think that's pretty much it. I just want to say thank you so much if you're still watching this. If you haven't already, please like this video and share it with your friends if you think this is fruitful info. But I'm going to close it out right here. Take care. Bye-bye.